It's Market Day Report. Well, welcome back. We're glad you're here. You know, we've got Chris Swift with us, and we're going to join Chris in just a moment as we break down the markets. But first off, let's look at the corn market. Corn has been in the red, remains in the red as well. December is off 4 1/4 cents, 4.04 a bushel, 4-cent trading range, 4 to 4 3/4 cents lower on the deferreds. Let's go to soybeans. Double-digit losses again. And forget about the 10 handle on November. It'll take quite a rally to bring that thing back. 9.86 a bushel. It's down 10. And January trades a couple of ticks above $10, but still 11 lower on the session. Let's go to the wheat market. Chicago, July is new crop 620. It's off 4 3/4 cents for the hard red winter wheat. July, again, new crop off 4 at 620 1/2. And spring wheat in Minneapolis, December at 620 1/4. It's down 6 1/4 cents. We've seen a sell-off in the crude market, and since then, December cotton has started inching higher, 71.07. It's up 4 ticks on the session. All right, I teased it. Chris Swift is with Swift Trading. And Chris, again, after that report on Friday, we've seen somewhat quiet trading, but lower trading.
Right. Lost a little bit of the volatility. We'd had some volatility up and down. Now we're just going straight down. And probably building a little bit bigger range there. You look at 380 as the 390 is the bottom end of corn. We're already back to 404 again. Beans, we were down to $9. Now we got back above 10, almost 11. Now back at low 10 again. So probably the creation of a trading range to mark time, get the rest of this U.S. harvest done, and get all of the crop in from South America. Once you get that in, then we start trading off of whatever weather aspects that they have. But when we look at the demand aspects, we don't see them changing a great deal right now. We know our Federal Reserve continues to try to control inflation, and that it seems like they're trying to pull money out just a little bit, keep things from being on fire as much. But then again, they lower interest rates. They talk about wanting to lower interest rates. And gosh, we just saw a big bout of higher interest rates. I mean, one day after the next, our dollar shot up immensely. So 2 weeks ago, we had a real reversal in the financial markets, and still to the equity markets going on today.
All right, so I'm glad you mentioned that. Let's bring up the equities, and we'll start with not class 3, but Dow futures, and see where we are. And ticking a bit lower here in the morning session. What about the NASDAQ? It's about 50 lower here on the E-minis. And then the S&P 500. Again, the E-minis, an opportunity to get in and trade that market with a lot less capital required. December, the S&P 500, they're down 3 1/2. Here's another one we've kind of kept an eye on is gold. And the October contract lower, but November, December, February, April, all trading higher. When you see gold moving higher, what's that tell you?
Government spending. It's inflationary, it's government spending. And look at the equities market. If you want to see inflation, there's nothing any more than inflated than the equities market. All-time new historical highs. Gold, all-time new historical highs. And we hear every day the consumer hurting. I'll listen to Scott talk about how some of the companies out there are not doing near as well. And yet we continue to do that. So there's a division there, and it's not very easy to see, but if you delve into it, you can clearly see that government spending continues to elevate. Yours and mine is cutting back.
You know, I hope we don't see another event like we saw in 1987. I know you know exactly where you were on October 19th, 1987, but hopefully we're not headed back in that direction.
I hope so, too.
Speaking of directions, how about we take this direction to take a break, and we'll come back in a moment. We'll talk with Chris Swift, livestock markets, as Market Day Report continues. Market Day Report. We've got a guy who knows what he's talking about when we talk livestock. We'll talk with him in just a moment. First off, let's look at how livestock futures are trading. We'll start with live cattle in the red. October 186.77, now 82, 186.82 off $1.42. The deferreds, $1.50 or deeper on the losses. What about the feeders? Well, we're watching the front month down to $1.90 at 247.22. Most active November at 246.95, down $2.62. And the hog trade has been steady this week and now 7 higher on the December, 75.87. I'm still impressed though watching June, though 5 cents lower, 95.32. I'm not sure what that signals, but seeing a 95 out when you roll through June is, well, it begs the question. And speaking of begging the question, what are we doing in the cattle market this week?
Well, we converged basis. 2 weeks ago, 3 weeks ago, we were in a massively positive basis. Cash was still trading in the 240s, upper 240s, and here we are at futures down in the 220s. So futures rallied sharply to catch the index. That's where it is right now, both October and November, dead in line with the index. January, the spring months are looking just a little bit softer. This is a complete change from the past 2 years where we held significant premiums in the spring months, and now we're just not. There has been such a fundamental change in beef production, how we produce it, how we're able to produce it, and our imports. All of that created a larger beef production for 24 than anybody ever thought, and that's going to carry on through 25. It may not expand anymore, but it's probably not going to go down either unless we hold back the heifers. If we see heifer retention in 25, we may find ourselves a little bit short of animals. If we don't, and due to the drought, we may not, we could continue to see cows and heifers be marketed, especially with the higher prices, than we do see them holding back.
Okay, so Oklahoma City, feeder auction yesterday. We did see steer and heifer calves 2 to 6 lower, while the feeder steers and heifers were up a couple of bucks. So again, just kind of working in line to what you're saying there. And as we kind of wrap this segment up, what are you looking at for the rest of this quarter? So through the end of December.
I think consumers, traders are going to contract. We got a major election coming up. Everybody is wanting to see who's going to be our next president. Which way do they want to move from there, and what will be the directive of the next administration there? So I think we're going to contract. I think consumers are having a little bit hard time making ends meet. I think that inflation continues to run. We just saw another 20 cents put on gasoline last week. We're down a little bit today. Maybe we take some of that back. But in all honesty, I think crude's probably fixing to go a little bit higher. We don't have a very good energy policy here in the U.S. And if we become more dependent on foreign oil out there, with them still sending rockets and missiles over, it could get a little testy.
Right. Okay. I told you he knew what he was talking about. And so glad that Chris is here. Chris Swift, again, with Swift Trading. And that's how we're starting your Tuesday.
Yeah, no, I love having you guys on. I'll give you the rest of the time. Yeah, we can keep going.